An email from Mohammed wants to know about the market over the next 5 years. He says, you're very bullish on U.S. equities. In this bull market, what inning are we currently in? How long will it last? And what sectors might do well over the next 5 years?
Okay, so Andy, as you know, I think we've been fairly clear on this. We believe that we began a revaluation of the equity asset class in 2013. Mm-hmm. And 2013, because that's when we took out the highs from the bull market of the 1990s.
Right, took a long time.
In the S&P, yeah. And it was the first major global developed market to take out all-time highs.
America was.
America. Yeah. So that is and what was and has been the leader ever since. And, you know, bull markets tend to last 15 or 18 years. With interruptions, right? Like you have cycles within a secular bull market. So the last one went from 1982 through 2000. And what was relevant about that period was through the entire period, the multiple of earnings investors were prepared to pay for equities slowly expanded, starting at 7 times, eventually 30 times or 100 times for the NASDAQ, okay? So 2013 was the first year of multiple expansion. And since then, multiples have been steadily kind of improving as people are more comfortable with the future. So we had the first serious correction of a bull market in 2015 into the beginning of 16. And that was a reset, starting a second cyclical rally. And I think that we're about 2 years into that, which is we probably got another year in front of us in the near term in this cyclical rally. But I think the secular revaluation of equities goes on for another 10, 12 years.
Do you think people are going to be willing to pay ever fatter multiples for stocks?
It's a combination of two things. It's a combination of, first of all, earnings are going up, so we pay for that, right? Earnings grow a little every year. The quality of the earnings is getting better, so we got revenue growth as opposed to just cost cutting. And then it's as compared to what, right? You're looking at a backdrop of a 10-year bond at 2.4%. So if you said, what is the cash flow yield of an average company? The average company in the S&P 500 is yielding over 6% on its capital. So you're getting paid, you know, actually it's about 3% excess return to buy stocks versus bonds. You're getting paid well to take risk. So stocks can be revalued for a long time. As earnings go up, there's a lot of drivers that can accelerate earnings, and they have been. But I think that there will be some significant, I think probably a year from now we get like a significant correction. But I do think we probably got another year in front of us of pretty good returns in equities before that happens.
And 5 years looks fairly good.
And then once you've got that next correction out of the way, you got another 3-4 years in front of you, much like you did in the late 80s. So I think we got a long way to go.
Okay, there's an optimistic outlook on stocks over the next half decade. Don in Ottawa. Go ahead, Don.
Oh, yeah, thanks, Andrew. David, can I have your assessment of cargo jet and the chance for capital appreciation over the next year?
Sure.
Thanks.
Sure. So, Don, at Barometer, my role is I'm the strategist. My job is to identify sort of key long-term structural themes that we can invest in. And we believe that in 2016, we went through a shift from a world where people bought equities as things that acted like bonds, like utilities and telcos and REITs and so on, to things that benefit from reflation in the economy. So things like financials and industrials and so on. And that's around the time transport started to act better. And so we really like the transport sector as a whole. We own things like FedEx, and we own a couple of airlines. We own some cargo jet. And cargo jet, I think, is a great business, you know, moving cargo ultimately for Air Canada. It's a great business. Technically, the stock just recently broke out after having consolidated really back to October of 2015. And so I think that the transport's a positive backdrop. Reflation is clearly a theme in this market, and we like the equity asset class. So I'd buy the stock here at this price.
Nick in St. John, go ahead, please.
Hey, gentlemen.
Hi.
I want to get your opinion on Orange Bank. I know they had a little problem. They still pay quite a dividend. I'm looking to buy the stock, but I can't decide whether to pick it up. You see any more down? Can I get a street concept? Andrew?
Sure, no problem. Laurentian
Yeah.
Bank just disclosed problems with a small portion of their mortgages.
Yes. So my premise always is, if you're in a good market, find the things that are working. So the banks are a sector that are performing well. I'm going to talk about some financials today. I just don't think you need to buy one that's got any kind of perceived problem. You know, if the market's doing well, you want to participate in it now. And so there are other people who try to figure out whether the market's got something wrong. I generally believe the market gets it right. So the stock's underperforming the bank sector. I would not be a buyer of the stock.
Yeah, you'd steer clear of Laurentian Bank. Let me just see what the analyst consensus is. I don't recall seeing any downgrades. There may have been one or two after they disclosed those problems, which they say are contained with certification or details provided on some of their mortgages.
So here's my question. You know, in the last couple of years, you had a swing from 55 to 42. You had a swing from 53 to 48. You had moves, like big swings in the stock. It's a very volatile stock. I like to find companies where there's a solid bid underneath the shares, where there's low volatility. The best charts you ever find are the ones that have a buyer right under the surface. And when something moves like this one does, I think that you take on more risk than you need.
It looks like the analysts are a little cold on this one. Laurentian Bank is one strong buy, two buys, but there's 6 holds and 2 sells. Of course, that might be valuation as well. We're going to be back with David Burrows of Barometer Capital Management. The topic, North American large caps. The number, 1-855-326-6266.